Joining us from the CME Group in Chicago, Bob Iaccino, Chief Market Strategist at yourtradingroom.com. What's happening today in Europe that could either take us back from down 100 like we did yesterday, or could take us down 200 or 300? What do you think is going to happen today? You still going with the disguise, I see.
It's the winter facial hair, Joe. It gets cold here.
Are you a protester?
Face starts flaking. No. Actually,
cold in that tent.
It gets me through the protesters much quicker.
Yeah, it does. They don't recognize you. They think,
I've got the beard.
You high five a couple of them, and yeah.
Just a couple. Then I wash my hands.
Man, that's
no offense.
No
offense.
IACCI. Yeah. Actually, there was a lot of. Kayla was talking about it yesterday. Yeah. Anyway, so what do you think? What are we watching? What are we keying on? Northern Europe now? It's amazing to watch this, like dominoes.
It really is, and Italy is too important at this point. So I think the market and the traders in general really believe that Italy will be rescued, but these bond yields, they scare us. They scare us out of positions. And that's been the tone for 2011, but Greece was sort of a limb that you could amputate and still survive, but Italy is a vital organ in the EU. So it really has to be saved. It's just a matter of a credible plan, and we don't believe Europe right now. We don't believe European officials. So we watch the dollar index and we watch the euro, but the dollar index specifically, you saw when it collapsed below 77, not just traded below 77, but collapsed in early October. You saw us establish our new range in the S&P of about 1220 to 1295 or so, and now you're seeing it creep back above, stabilize above 77. So you see us getting out of positions. These headlines out of Europe, it shortens our duration as a trader. It should widen or grow the duration for investors from a macro view.
Well, when do you have any type of timeline on this, Bob, when it's business as usual again? Is it a year? Is it multiple years? Is it months? What is it?
In terms of Europe, here's the thing. From a trading perspective, that higher range was a good thing to see, because you're seeing traders focus more on the U.S. being a decent place to put money in terms of equities. I'm hearing from a friend of mine that advises pension funds that they're getting out of bonds and they're getting into dividend-paying equities, higher-yielding equities, as well as corporates. But the corporate side of it, corporates are even doing well in Europe, corporate bonds rather. The yields are not suffering like the sovereign debt yields are.
Well,
so you're seeing...
Does that mean a decoupling at some point? I mean, we've been following the market. Every time there's a headline out of Europe, drops lower. Every time there's concern about some of the European debt. But if those pension funds are selling European debt and they're getting into stocks, will there be a decoupling where even if the debt markets in Europe are in disarray, that the stock market could continue to climb here?
Well, there is a point where the stock market collapses at that. I just don't believe that Italy will go that far, because Italy bleeds into Spain and France specifically, and I don't think they'll let that happen. So that's why I think pension funds are comfortable getting in specific stocks and specific sectors, and again, getting into corporates, which means that corporations are going to be flush with cash, and when that tipping point comes, they'll put that cash to work. And I can't really get bearish on U.S. equities because of the data and because of the cash that U.S. companies have, but you look for about the middle of 2012 to see if it sustains. The higher range is a good thing. Let's stay in that higher range.
Larry Fink yesterday. Who hasn't de-risked? All these people, hedge funds, pension, everybody's de-risked. Everybody's sitting there afraid to do anything, but they got to do something eventually, Bob, right? I mean,
the pensions need
I'm going to use what Fink said, that asymmetric. I'm going to start talking like that, especially a cocktail party. The asymmetric risk is to the upside. People are going to like clink my glass when I say that. Yes.
I've been using leptokurtotic bell curve. I don't know what it means, but I've been using that a lot.
Wow.
Leptokurtotic.
Wow.
Have somebody email and tell me what that means, because I've been using it, but I don't know.
That's what I like to do too. All right. Thanks, Bob.